So, Stephen, when you look at ECB, we're all waiting for a signal on when this bond buying program will be phased out. Are we going to find out today, or do you think they'll just push it away?
My hope is that we will find out more details today, because if you keep markets hanging, then they will start to construct their own narrative. And I think we've seen with one of the key skills of central banks is their ability to communicate with markets and guide expectations, and so they won't want a vacuum to persist. So I think we will get some sort of guidance. My sense also is that if you think about the tone of some of the speeches that have been made by Jens Weidmann and Peter Praet, for instance, there has been a more confident tone about the durability of the recovery that the ECB has been underwriting with its QE policy and its very, very low rates policy. I think more important than the bond buying program is the duration of low rates. So we all know that rates will remain low until the end of the bond buying program, but people will start to look for clues to that as to when rates will start to rise.
Stephen, talk to me about inflation. This is what we're seeing. You can see the euro area inflation measures still stuck below 2%, but they're kind of creeping up. I don't know whether that has more to do with fuel than anything else.
Do you know, I would basically attribute almost all of that to fuel. You can see that there's been a very sharp spike recently. The oil price has been, $70, $80, and I think that has a lot to do with it. Plus, the euro having been strengthening through much of last year actually has weakened off a little bit. You've seen the dollar rally. So that's going to mitigate some of those inflationary pressures. The core measure for inflation isn't really moving, and we're going to get an update on the ECB's own inflation predictions, but they're not predicting that inflation will breach the 2% threshold within, I think it's the next 3 years. So they're still seeing only a very moderate rise.